La la la, hey, yeah, yeah.
Yes, ladies and gentlemen, that's right. It is Monday, and that means it's time for Money Monday with Judith Cane. We rather enjoy that. I like that. Yes, it is time for Money Monday with Judith Cane. She joins us each and every month to give us fantastic financial advice, and she's from Antara Financial. Judith, it is great to see you. You look well rested and tanned and back from Palm Springs.
Miss Palm Springs herself over here.
Welcome back. And today's
Thanks.
topic, I think, is a great one to talk about because we've never discussed it before on the show.
No.
Credit reports.
Credit
Let's start
reports.
off with the obvious. What is a credit report exactly?
A credit report is a compilation of your financial information. So anytime that you've ever had any kind of financial transactions, whether it's a loan or a credit card, or you've bought a car and had a loan on the car, you've had a mortgage, all of that information, including your name, date of birth, social insurance number, address, previous address, employer, previous employer. It's all compiled with one of two companies in Canada, credit companies in Canada, with that information. And that is the basis behind your credit report.
So how do those institutions then use this information?
Well, you are scored on the activity of your financial transactions. So if you pay your bills every month, you only have one credit card, you maybe had a loan and paid it off, and you have a mortgage, then it's likely, and you have a pretty standard history, career history, and where you lived, if you weren't moving all over the place in, every month, then you probably have a pretty high credit score. And it goes between 0 and 900. And the higher your score is, the better it is, because when you go to get a mortgage or get a loan, the lending institutions look at your scores and say, how has this person done with their finances over the years? And the higher the score is, the better it is for you, because the lower the interest rate's going to be.
Okay. And all of this information goes automatically?
Yes.
Like as we're applying for loans and doing whatever, you said there's two financial institutions that take care of it.
Yes.
Automatic?
Yes.
Okay. If we want to have our credit report, if we want to find out what it is before we go and apply for that loan and they're going to get it, how do we find out?
There's two ways. One is that you can go online to the company and ask them to send you a credit report by mail, and that's free. And it will send you all the details that are in your credit report plus what your score is, and that's free.
Okay.
Or you can go online and pay a fee, and it's usually around $25, and you can get it instantly. And the important thing about checking your credit report is to ensure that the information that's on there is actually correct.
Okay.
Because if you have had your identity stolen and somebody else has used your credit report, or the information's gone on your credit report, you need to correct that. Or if you've paid off a loan and it hasn't shown up on your credit report, you need to correct that. The other thing that affects your credit score are the number of credit cards that you have. And you may not be using those. You may have had one of those credit cards that said, we'll give you 0.9% if you transfer a balance over, and you pay it off and you don't use that credit card anymore. The idea that you still have that credit available affects your score. So if you have 5 credit cards that all have limits of $5,000, $6,000, $10,000, the lending companies look at that and say, wow, they have $50,000, $60,000, $70,000 of credit available, and that actually affects your score.
Oh, even if there's zero balance on
That's
them.
right, even if it's zero balance. Or if a long time ago you had a department store credit card which you thought you had canceled, you need to check your credit report to make sure that it was actually canceled, because sometimes these companies will just put it in what's called suspension mode. So they don't really cancel it, they just put it in suspension mode. You need to check your credit report, I think, every year.
Judith, if you have a poor credit report, you get it checked, you find out it's very poor, how do you work yourself out of that?
Well, it's hard to do that if you're in struggling financially. But really, if you can pay your bills every month, that's probably the best way to do it. And even if you can't pay the whole balance off, if you are consistent in your payments, sometimes it doesn't even matter how much you pay, but if you are consistent in your payments, it shows up on your credit report as this person pays their bill. Keep your credit down so that if you have a credit limit of $10,000, keep it about 35%.
Okay.
And that way they don't look at it and say, she's got way too much outstanding credit.
What's the danger zone? Like you mentioned that, okay, I think you said it goes anywhere from 0 to 900 could be your score.
Right.
So if I was going to go and apply for a mortgage tomorrow or something, at what point, say I got my score back and it was 500. Is that good, or where should we be worried?
48% of people are around the 600 or 700 range, and that's probably going to get you the best. You'll never be at 900 because that's perfect.
Right.
But if you're around the 600 or 700 range, I think you're still really able to negotiate your rates for mortgages and loans.
Okay.
Yeah, at 700, you're even better.
I have to ask you this because we've all seen these cheesy commercials with these, used car lots and bad credit, good credit, doesn't matter, rebuild your credit. Is there any truth that you can actually rebuild your credit by, let's say, purchasing a vehicle and getting the finance for it? Is there any truth at all to that?
Derek, as long as you pay consistently, then it helps improve your credit limit or your credit report. As long as you pay consistently, that's really the big thing. The minute you stop paying your bills, that's when your credit rating starts to go down.
Okay.
So is that also automatic? Like, okay, they receive the information that you're looking for loans and applying for loans and all of that. So as you're paying, is that also automatic? That information goes?
That's right. Because the credit card companies submit the information that says they have a coding, and there's a number and a letter related to it, what kind of a debt it is, and they'll have a number beside it. So if you are each one is different, but if you have the right letter code and the right number code, it means that you're paying off your debts consistently. Okay. You may have a large number of debts, so getting rid of your credit cards. And by the way, you can live without credit cards. I want you to know that it's possible to live without credit cards.
That's good to know.
It is good to know.
Honestly, sometimes it feels like
it feels like you're not alive if you don't have one. Right?
But it's really more convenient than anything.
Yeah.
So
as always. Great advice. Yes, and I'm going to do that right now.
Okay, good.
I'm going to do that right now. Judith, if you want to find out more about your credit reports as well as what we discussed last month on credit cards, she has a giveaway. She's giving away 5 financial packages, for the first 5 people that email her at judith@antarafinancial.com. So you can use her great advice as well. We're going to take a quick break. We'll be back in the kitchen with Merlot, the restaurant at the Marriott Hotel. Don't go away.